Welcome to my channel. In this video, I'm going to talk about stock screeners. And I'm going to use a screener on Etrade just because I'm used to it. But the screeners are fairly similar across all platforms, and most of them are free. So you go to Yahoo Finance and pull up their screener. That's really good. It's hard to find a stock you really want. There's so many different things to look for. That's why using a screener really helps. So let's start from the top and we'll go through every single field. So the first thing is the capitalization. That's the value of the company. And they have micro cap, which is under 300 million market cap. The market cap is stock price times shares outstanding. Small cap is between 300 million and 2 billion market cap. Mid cap is between 2 and 10 billion. Large cap is between 10 and 200 billion. And mega cap is over 200 billion. The smaller the market cap, the more companies there are, which makes sense. Micro cap, there's 3,700 companies. Small cap, 1,730. Mid cap, 1,048. Large cap, 744. And mega cap, 35. I only invest in mid cap and large cap companies. Once in a while, I'll invest in a small cap or micro cap, but that's just for fun. The bulk of my money is in the larger companies. Then they break it down by components. New York Stock Exchange American used to be called the American Stock Exchange. It's just an exchange where people buy and sell stocks. The Dow Jones is just an index tracking 30 stocks. The NASDAQ is a stock exchange where people buy and sell stocks. The New York Stock Exchange is the largest stock exchange in the world. The S&P 400 is an index that tracks mid-cap companies. The S&P 500 is another index that tracks large-cap companies. The S&P 600 is an index that tracks small-cap companies. If you prefer to invest only in NASDAQ stocks, you can hit the NASDAQ button. I usually don't hit any of these buttons. You could also break it down by sector. If you want to look for financial stocks, you can hit the financial button, and it breaks it down by industry inside financials. You could do insurance. Every sector you can choose and then break it down even further. Energy sector, and then do oil and gas or renewable energy, anything you want. Let's just keep it at all sectors. So share price is something I usually don't look at because it doesn't really matter how much the stock costs, it matters what it's worth. But if you prefer to only invest in stocks under $100 because you like to buy more than one share, for instance, you can do that. Just put $100 and leave this blank, so anything under 100 will show up. You can also do things above a certain amount. If you don't like investing in things below $10, for instance, you could put $10 and a penny, and then everything above $10 will be listed. If you like trading volatility, price change might help you. You can look for stocks that had greater than 20% price change in the last 4 weeks. Or you can do greater than 10% over the last 52 weeks. Whatever you want to do, I usually leave this blank. You can also choose stocks that increased a lot or a little relative to the S&P 500 over the past 4 weeks, 13 weeks, or 52 weeks. So if you choose below 40% over the last 52 weeks, there's 227 stocks. If you wanted to invest in stocks that outperform its industry between 0 and 20% over the last 52 weeks, you can do that as well. There's 335 stocks. You can also look at stocks that have high trading volume as well. You can choose different parameters. And the beta is how volatile the stock is relative to the market. The S&P 500 has a beta of 1. But if you want a stock that is less volatile than S&P 500, there's 622 stocks. If you want stocks that are more volatile, there's 948. Short interest as percent of float is the total number of shares that are shorted in the market over the total shares outstanding. If you only want to buy stocks that are rated as a buy with Argus, then click the buy button. You could also look at the stocks that are underperforming. Just click the underperform button. I feel the most important is the fundamentals. PE ratio is the price of the stock over earnings per share. Generally, the lower the better. If you want a stock that's a really good value, then pick one with a 0 to 15 PE ratio in the past 12 months. Or you can do it for the current fiscal year or the projected next fiscal year. The PEG ratio applies a growth rate to the PE ratio. If analysts expect a company to have a 20% growth rate and the PE is 8, for example, the peg would be 8/20, which is 0.4. A peg below 1 is considered good. So you could pick below 1. You could look at the companies above 1 as well. Profit margin is net income over revenue. It's how profitable the company is. So you can pick any percentage you want. You can even go above 90%. And there's only 9 companies, of course. It's going to be a small number. But if you do 10 to 20%, there'll be a lot more. Price sales ratio is price of stock over sales per share. I like to see between 2 and 3, but of course the lower the better. And you could pick everything between 0 and 3. Price to book ratio is stock price over book value per share. And also the lower the better for this. And generally the lower the better, so you can pick 0 to 1 and see which companies come up and look at those companies. Price over cash flow is price of stock over operating cash flow per share. And usually the lower the better for this as well. So if a company had a 5 price to cash flow ratio, that means you're spending $5 to get $1 of operating cash flow. ROE is net income over equity. The higher the better for this. So you might want to go above 25%. Debt over total capital ratio. Total capital is assets minus liabilities. Investors usually prefer 30% to 60% for this ratio. But if it's above 60%, it could make it difficult for the company to borrow money. You could also look to see how many employees a company has. I usually don't look at this field. Percent owned by institutions is the percent of stock owned by mutual funds, hedge funds, private equity firms, pension funds, large institutions like that. It could be considered good if you own a stock that's owned by a lot of institutions, because those type of companies do lots of research to find the best stocks. Although it would be ideal to own a stock before all the institutions find out about it. Insider activity over the last month. This is just talking about whether executives at the company are buying and selling stock. Net accumulation means they're buying stock, and net distribution means they're selling stock. The most important thing when you invest is your return, how much money you get. This section is earnings and dividends. Earnings per share growth. EPS is net income over shares outstanding. You could select companies that had a 10 to 15% earnings per share growth over the current fiscal year, or any parameter you like. Revenue growth is the sales growth of the company over the current year or next year. And you could do a greater than 50% growth over the next 12 months. This is of course estimated. You could do EPS growth quarterly, and you could do revenue growth quarterly. You could look at number of consecutive quarters of positive or negative earnings. If you only want to invest in companies with positive earnings, you can do that. Or if you want to invest in companies with negative earnings because you think they're going to turn things around, you can do that as well. Payout ratio is dividends over net income. If you only want to invest in companies that pay out a lot of their earnings as dividends, you could do above the industry average, or you can do below the average. Dividend growth, if you like to invest in companies that have growing dividends, you can do that as well. Dividend yield is your annual dividend over stock price. If you want to invest in companies that pay out over 8% of their stock price in dividends, you can do that as well. You could also search by nominal dividend. If you're looking for a dollar amount, like $3 to $5, you can enter that. You could also look at the nominal dollar amount per quarter. If you prefer to invest in companies that are within 10% of their 52-week high, you can choose that. The exponential moving average is a popular technical indicator. It is similar to the simple moving average, but it places more weight on the recent stock prices. And if you only want to invest in stocks that Market Edge labels upgrades, you can do that as well. Leave a comment. I reply to all comments. You could also become a member of the channel for as little as 99 cents a month up to $99 a month. Thanks for watching.